Most investors will look at today's trading as the Dow traded lower, kind of bearish. The candlestick investor looks at it on the basis that this type of formation, a hammer type signal that closed right at the T-line area, an indecisive trading day, tells you there isn't that powerful a selling pressure on this market, that more than likely this uptrend remains in progress. When you add the factor that the NASDAQ actually came right down to the T-line and bounced back up doing a doji day, the simple assumption is the uptrend remains in progress as long as the indexes continue above the T-line. And the fact that the NASDAQ traded lower today is offset by the fact that it did a doji day. It wasn't aggressive selling. It was indecisive trading. Candlestick analysis allows investors to assume or place stops at places where trading shouldn't occur. Today, Cons, after a nice fry pan bottom breakout, announced earnings that were good earnings. However, you can see what the investor sentiment was. Even though they were very strong earnings, apparently they weren't strong enough to make investors happy. This is why knowing where you should place stops, especially after a gap up in an overbought condition, to protect your profits. Everybody tells you to cut your losses short and let your profits run, but they never tell you how to do it. Candlestick analysis makes it very simple. It shows you graphically where prices should not be trading. Because candlestick charts have patterns and signals that tell you when there's been a dramatic change of investor sentiment, it allows investors to get into the appropriate trades at the appropriate time, telling you there's strong bullish sentiment. As we can see in our recommendation on INNT, it had a fry pan bottom breakout on Friday and continued up another 25% on Tuesday's trading. Where's the next likely target that everybody will be watching? See what happens once it gets up to the moving averages. But the strongest element is that candlestick charts tell you when there's been a drastic change of investor sentiment. It also allows you to pinpoint what patterns are setting up. A very strong pattern in candlestick analysis is what we call the J-hook pattern. A very strong price move, consolidation, and note what the consolidation did on this chart. They could never close it below the T-line before starting back up. Knowing that human nature works the same way time after time allows us to take advantage of price moves based upon knowing that human nature working the same way time after time allows for this move to be the same magnitude as this move. So even if you miss this also becomes now a setup to get ready for the next move. Candlestick analysis is merely the graphic analysis of investor sentiment working the same way time after time. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Candlestick signals are merely the graphic depiction of what's going on in investor sentiment. That'll be it. We'll see you in the chat rooms.